Trump mega bill will give $114 billion in tax cuts to the top 1% in 2026. I saw someone quote this. I don't know if this is the case for this specific bill, but that the tax provisions in the big, beautiful bill provide the largest tax increase to billionaires in history. The predominant feature of the tax and spending bill working its way through Congress is a massive tax cut for the richest 1%, a total $114 billion benefit to the wealthiest people in the country in 2026 alone. It's not just a shift to the rich, it's a shift among states. Money that could otherwise be paying for rural hospitals, farm support, Medicaid, food assistance, or middle-class tax cuts in North Dakota, West Virginia, Maine, and Vermont, states which get relatively little from tax cuts for the very wealthy, will instead be flowing to billionaires in Texas, Florida, California, and New York. To put that in perspective, if just the $18 billion tax cut going to a tiny sliver of rich families in Texas were instead divided evenly among the population of the entire country, every single person, adult or child, would receive about $50. In all, if the $114 billion in tax cuts for the richest 1% nationwide were instead redirected evenly among the nation's population next year, each of us would receive $335 or over $1,300 for a family of four. So it looks like Texas, Florida, California, and New York unsurprisingly have the most billionaires and people who sit in the top 1% of income earners. And so they're, of course, going to see the most, the biggest overall tax cuts in revenue and whatnot as a result of this. It's just the exact ass backwards thing we do. Ask any serious economist, where we sit on the Laffer curve, right? Let me pull up the Laffer curve for you. I'm going to make this extremely simple. There's a concept called the Laffer curve. The Laffer curve is a very basic concept, and there really isn't all that much that one can take away from it economically. But basically, it's the idea that there is a sweet spot somewhere between 1% and 99% taxation to maximize government revenue, right? And that probably 95% taxation is probably too much and is not going to maximize revenue, but also 5% taxation is not going to maximize revenue. And so that ideal equilibrium spot sits somewhere in the middle between 0 and 100%, right? It's that the vast majority of economists, any serious economist, believes that we are on the left side of the Laffer curve, that we would benefit from seeing a tax increase in certain sections of the economy, and that it would overall increase tax revenues. So this is the exact opposite sort of thing we need to be doing at this point in time when we firmly sit on the left side of the Laffer curve. Most economists, any serious economist believes that the United States experienced the largest economic boom during, post-World War II in the 50s and 60s when we had a really high top marginal tax bracket, which makes sense. It both maximizes the government's revenue and provides the proper incentives in the economy, right? If you already have way, way more money than you could ever, hope to use in one lifetime, and the government is saying, hey, you can't take all of this home in income, then it makes sense that you're going to want, the government says, hey, we're going to tax you 95% on every dollar you make after $10 million a year or whatever, that those same people who were going to maybe make $15 million a year are going to say, hey, maybe I'm going to take that $5 million on top that would have been taxed at 95%. Maybe I'm going to invest that back into my business in some kind of way. That's typically how these things work. Yeah, this is insane, the exact opposite thing we need to be doing right now.